Happy Friday out there, Team 42. It's your skipper here at Darius now to present our macro minute for Friday, August 2nd, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to stay on the right side of market risk, you need to be a client of 42 Macro. So today's key macro question is the U.S. economy heading into recession? Our answer is the violation of the SOM rule today in today's jobs report and yesterday's ISM manufacturing PMI bomb have investors degrossing stocks and piling into bonds at a pace not seen since early 2020. So is the U.S. economy heading into recession? Not likely, at least not for a while, per our analysis of persistent leading indicators of the business cycle. As such, investors should not be too alarmed at the state of the softening U.S. labor market. That implies the Fed is unlikely to be as aggressively behind the curve as the current state of U.S. dollar money markets and the Treasury market implies. We currently expect nominal real interest rates to back up and stocks to recover in the coming months as investors gain more confidence in the sustainability of the U.S. business cycle. If the persistent leading indicators of the business cycle evolve in a manner that actually supports recent price action, we will change our tune and sound the alarm bells loud and clear. But for now, we're chilling. So transitioning to our 42 macro dashboard, as always, we'll wrap up with a question from our community. This one's regarding our weather model and our VAM signal. It reads, hi, Darius. I'm a little confused on how to use the macro weather model in conjunction with the BAMs. Just be aware. Just for investors, everyone should be aware that we use our volatility adjustable momentum signal as the powering feature of our the KISS portfolio construction process, which we use to help retail investors stay on the right side of market risk, and our discretionary risk management overlay, aka Dr. Mo, which we use to help professional investors and sophisticated retail traders stay on the right side of market risk. So the VAM signal is our volatility adjustable momentum signal. That is what's powering those tools. Our macro weather model we use as a sort of leading indicator, if you will, to help us anticipate regime change in macro markets. As you know, one of the things, the primary thing we do for our clients is help them identify and position for the market regime. The second most important thing we do for our clients is help them anticipate regime change so they can, book gains in the appropriate securities and rotate into securities that are likely to perform better in the upcoming regime. And so we use the macro weather model to give us a look around the corner to identify, okay, is the current regime likely to transition over what time horizon, and what is it likely to transition to based on the composition and the constellation of the principal components of macro featured in the macro weather model. So again, we don't use our macro weather model to tell people what to do in asset markets. So it sounds like the client might be a little confused on how to apply that. But we do use our volatility adjustable momentum signal as the guiding feature behind our KISS portfolio construction process and our discretionary risk management overlay. And those things have done a fantastic job of keeping our clients on the right side of market risk. A high five to everyone out there who were booking gains back in late June when we were telling you to take down risk in late June vis-a-vis KISS or vis-a-vis Dr. Mo. We had a couple guys who were kind of chiding me at the time saying, hey, your signals are going neutral. We're in a raging bull market. And guess what? The signals went neutral ahead of the correction like they always do, like they tend to do throughout over the course of market cycles. So we're very proud of what we built here. We're very proud of the positive outcomes we're contributing to all across the world, across thousands of client portfolios. And we're really appreciative and very excited to present our August macro scouting report to clients this afternoon. So if you're confused about what the hell is going on out there, a lot of folks are concerned about the recession probabilities rising. A lot of folks are concerned about the Fed being behind the curve. A lot of folks are concerned about the meltdown in stocks. A lot of folks are concerned about a lot of things, and we're going to clarify a lot of where we are exactly in the growth, inflation, policy, profits, and liquidity cycles this afternoon for our clients in that deep dive presentation. And it also features our investing during the fourth turning regime analysis update. So stay tuned for that if you're a paying client. And if you're not, I don't know what the hell you're doing these days. But best of luck out there to you anyway. Cheers, everyone. Have a great weekend. We'll catch you back here on Monday.